Bitcoin is stuck in a range between $58,000 and $61,000, but open interest is rising and we have a possibility for a short squeeze if Bitcoin is able to break the 62,000 ceiling. Meanwhile, Ethereum is bleeding. The Grayscale ETF so far lost $2.5 billion in outflows since it launched, and overall retailers are scared to get in the market. So let's talk about this in today's video. Happy Friday, everyone. I hope your portfolio is greener than ever. So as I said before, Bitcoin is stuck in a limbo. We can see right here that after the first week of August, we've been holding 62 at the top and 58 at the bottom. But that being said, right now, that is the first time that Bitcoin is closing above the 200 EMA, so the 200 moving average. I only have the 100 here, but that gives a little bit of hope that Bitcoin could be bullish again. But nonetheless, we have a huge, strong ceiling to punch through, which is the $62,000. And after it breaks that, it can go from 64 all the way to $68,000, according to experts. So why is it so slow? Why is Bitcoin price stuck? As I said, this is the box where we are stuck. We have been stuck since August 8th right here. So weeks already waiting for Bitcoin to do something, you know, just like that meme, the guy poking Bitcoin, hey, do something. From this image, we can see that the retail side of crypto is not very interested in getting in right now. There's very little inflow. Actually, there's outflow of money so far. So the demand for crypto has been low in the last 30 days, which doesn't bring in liquidity, doesn't bring in new money or just recurrent money into crypto markets, which brings low volatility and low volume for Bitcoin and all the other coins as well. This, given the fact that we've already seen that August is usually not a good month for Bitcoin on the historical data analysis. So August and September are not going to be very good months, in my opinion. We're going to see these numbers or close to these numbers as the medium. So for August, we're around the 6.5% in the red. For September, we are around 5.5% in the red. So overall, we should be expecting these numbers to repeat themselves just like they did for July, where I said there was going to be in the green, and we actually end up in the green as well. But October is going to be our winning month. Again, we're going to be waiting for elections. So this should bring in a lot of volatility, a lot of volume to crypto markets as a whole, independently of who is going to win and who is going to lose. That being said, in the past 24 to 48 hours, we've seen a bit of a spike in Bitcoin's price from high 50s to low 60s, waiting to test the 62,000 that we talked about. And that the ups and downs, like this up and this down, and then we have up and down again, testing the 100 moving average. This one gave us liquidations as always. So right now, in the past 24 hours, we're looking at $130 million of overall liquidated positions. And they're balanced. They're 50-50 for longs and short positions, because longs got liquidated when the red candles came in, and shorts were liquidated when the subsequently green candles came back on. So you can see the markets on the micro level are always trying to predict where Bitcoin will be, but overall you have to play a little bit safe and go on the macro. So zoom out a little bit to see weeklies and even monthly charts for Bitcoin to understand where it's going to go. And you use that with historical data like I just showed you before, and you have a little bit of a ballpark of the numbers Bitcoin should be expecting for month over month. On the liquidation heat map, this is the number that I was talking about. 62,000 is the price itself for where there's a lot of liquidation waiting to cascade from shorts. And you can clearly see that it is brighter here at the top than it is at the bottom, but we have the 62 and the 58.5 right here. These are the two marks for Bitcoin that will trigger cascade effect liquidations, just like we saw a few weeks ago for Bitcoin and consequently for everything else. We got close to the 52 right here, and we got some liquidations. You can see this green right here was touched. There was a little bit of liquidation on the long side and also on the put side right here. So we are just waiting for this right now. We're just waiting to see if we're going to trigger the huge liquidation at the 52K mark. If we're able to do that, we can reach the 64,000, maybe even a little bit higher. So as we can see from these charts right here, we have been testing the same levels for a while now. This is time number 5. And if we break this level right here, which is the 62K, we can be looking at 65 up $100,000 here, and on a long view even higher than that. But again, we have to wait for a confirmation after it breaks, because it have to test again what was a resistance, has to become a support, and then we have to see if it's gonna show us any signal that is going to be picking up some speed and keep going up. Meanwhile, things are not different for Ethereum. You can see Ethereum is also in a box right here, and this box is a little bit tighter than percentage-wise than the box Bitcoin is in. And we haven't seen any movement from Ethereum either, but we have more bearish news for Ethereum than we have for Bitcoin, because here we have been testing the 100 moving average, which is trending down. So it isn't bullish for us overall, just looking at it right now. It is funneling down, it is not funneling up. So we have to wait and see any confirmation. But so far, things don't look good for Ethereum. And another thing is that the ETFs, they're not doing good at all. So the two biggest ones are BlackRock and Grayscale, but Grayscale has been bleeding since July 23rd. So for a whole month now, it has been bleeding. There has been more outflows than inflows. Actually, there hasn't been any single day with inflows for the Grayscale ETF. You cannot say that for BlackRock, because BlackRock, we've had a lot of inflows and no negative days. But other than these two, all the other ETFs, they don't have as much volume as the others do. So looking here at the ETF stats, you can see all these days, these are millions of dollars. So all these red numbers here are millions of dollars that are leaving the ETFs each and every day. We've had one day where it was zero, so there was no money in or out. It was net zero, which amounts to an overall $2.5 billion that just left the ETF itself. And if you add it all up, it is still negative by $500,000 that left overall these ETFs for Ethereum. Even if BlackRock has more seeds right here, it is not enough to cover the $2.5 billion that just left Grayscale. But this isn't just for you to be scared. This doesn't mean that Ethereum will break, will go down all the way to zero. No, it just means that on the ETF side, especially for the Grayscale, it doesn't make much sense for the user to keep their money there. It is not viable. It didn't have the returns that they expected. There's a bunch of reasons, and you can see that the BlackRock ones and even the other Grayscale one, they're performing okay. They have more inflows than outflows. It's just that Grayscale one that is shifting the narrative down because it had the most amount of money overall leaving. So the outflow was higher than the inflow, which weighted everything down a little bit. So again, same thing for Ethereum. We don't have a lot of retail pressure right now, because if you look at the Fear and Greed index for crypto, it doesn't look that good. We're at 39, which is better than a few days ago, because last week was 29, yesterday was 26 because of the fast red candle that we had. Whenever Bitcoin moves more than 1% on the direction, you can see this Fear and Greed index shift quite a while. But if we look back to August 6th, where we had 17%, we're now looking good with 39. And this factor is just to see the overall sentiment of everyone else in the market. Because again, this is not smart money, and you should focus more on where smart money is and what smart money is doing than what the retailer side of things is doing, because retailers are like sardines. They are very scared. They move in huge schools of fish. So whenever there's panic, everyone starts freaking out, and whenever there's frenzy, everyone starts to get excited because they move like a pack. They copy each other. If one is happy, everyone is happy. If one is sad, everyone is sad, and this reflects in the Fear and Greed index and the market conditions, but it is only on the retailer side. Whales, smart money, they keep doing what they're doing on a good and on a bad day for crypto, and they keep making money. So if you also want to make money, check out our last video where I show you the huge returns we're having on the copy trading strategy, which actually we just crossed the 20% in just 2 months. So a little over 2 months, we've been doing amazing, fantastic job. We've crossed the 600 mark for this account, which I deposited $500 on June 11th, and now we are on August 23rd. So we've been doing very, very good with this strategy, which projected is over 130% per year. So if you want to learn more, the last 2 videos are very good for you to understand how to deposit into the topics and how to deposit into this strategy and what is this strategy actually. So July has been our biggest month. August is third in place, and May we started late May, so this data is not for the whole month of May, but just for the days in May that we've been live with this option, with this strategy. So this will conclude today's video. I hope it was helpful, insightful, and now you can understand what is going on with the markets a little bit better. So I hope you enjoyed, and I'll see you Monday. Thank you so much. Have a great weekend. Peace.